All right, so on the wolf chart, we're dealing with pretty much, I put this chart together based around my trading strategy and how I kind of approach the market and how I approach trading in general. And the way I trade, my whole goal is to trade with smart money. And if you have you heard the term smart money before?
No, sir.
Okay, so when you're trading with smart money or who smart money, smart money are people like Warren Buffett, J.P. Morgan Chase Bank, Wells Fargo, these hedge funds, or anybody that has enough buying power to actually make the market shift in whatever direction they feel like they want to manipulate the market in. And so when companies like ARK Invest, like with Kathy Woods that buys a lot of Tesla, or Berkshire Hathaway with Warren Buffett, when these guys buy shares of a stock or when they buy option contracts, they buy like millions of shares at a time sometimes, right? And so
Yes.
with that type of money, it creates a lot of volume and it pushes the stock, aggressively in certain directions, especially when they decide to dump a stock. I don't care if the stock is as big as Microsoft. If enough of them start selling, it can drop like this. Microsoft is a multi-trillion-dollar company with a multi-trillion-dollar market cap. But if they start dumping their shares, they can drop Microsoft like this, right? But also only they can buy in and shoot Microsoft up like this. Okay.
Yes, sir.
All right. So what I'm gonna do is I'm gonna isolate certain parts of the chart to just so you can understand how each indicator works,
Okay.
and then I'm going to put them all together and show you how we enter and exit trades with these indicators. Okay.
Yes, sir.
All right. So let me take these off. So the first thing we're going to look at these smart money buy zones, or sometimes you will hear me refer to them as smart money order blocks. And all these are us focusing on where they're buying into the stock at. So with on the wolf chart, what we can see is these green zones and these red zones on the chart, right? And so, and before we get into that, on TradingView, the first thing, if you're new to TradingView, the first thing that'll frustrate you is that sometimes when you, especially you have zones on your chart like this that's showing these order blocks and these buy zones, your chart will be smushed down like this right here, right? It is sometimes you would change your time frame, your chart will be squished together like this.
Yes, sir.
So in TradingView, over here with this price scale to the right hand side, if you're on like a tablet or your phone, if you swipe up, with both your fingers on this price scale, this is how you stretch your chart out vertically, right?
Yes, sir.
And then down here at the bottom, you can
Amen.
stretch, yeah, widen your chart out horizontally from left to right, right. And then you also can grab the chart, pick it up, and drag it anywhere. So if you pull up your chart, it's stretched out too big like this right here, it's looking all crazy. You just bring it down, slide it from left to right, so you can see the current price action, and you can move your chart wherever you want to be able to see. Okay. All right. So the first thing we're going to focus on though is these institutional order blocks and how do we use these to get in and out of trades. So we're looking at Microsoft right now on a daily time frame, and everything I'm telling you applies to every time frame. So it doesn't matter what time frame we're on. We're just going to start with the
Oh,
daily.
okay.
We're just going to start with the daily time frame. But if we look at Microsoft chart, we have these we have these buy zones on here, and we have these sell zones. So we can see by putting our mouse on this candle, if we touch this candle that started this zone, this green buy zone, at the bottom of trading view, it's going to show you the date that it happened on. And so this happened on April the 30th of 2024. Okay. And institutional investors, these billionaires or these companies that manage trillions of dollars of shares of stocks, right, or buys them, they came in and bought Microsoft between the price of 402.16 and 389.17. And the reason I know what range they bought it in is because at the top of Trading View, they have this OHLC. This O is for the open, the high, the low, and the close. So each one of these candles on the chart, they have to open and they have to close. And it's based off which time frame they're on, right? So are you familiar with candles opening? What do I mean by open and close candle?
Yes, sir.
Okay. So when you at the top of every trading view chart, they give you this data up here that shows you the opening price, how high that candle went after it opened, how low it went after it opened, and then what price was it before the candle closed. Okay. And so if I look at the high and low of that candle, it shows me that the high of it was 402.16 and the low was 389.17. So that lets me know the range that they accumulated their shares of Microsoft. So you see, after they bought Microsoft, when you have this much money coming into a stock and you put a limit order in to buy the stock, what happens is once that order starts to fill, say if they want to buy $50 million worth of Microsoft or $100 million worth of Microsoft. As that first 30 million to 40 million starts filling in, the order starts to fill, the price starts going up as they're buying. And then it eventually leaves their price range where they want to buy from. So it leaves this $60 million just sitting here waiting for Microsoft to come back down and it'll rebuy, right? So you can
Yeah.
see Microsoft price shot up after that buy. They took profit between 468.35 and 458.97. I'm still looking at the high and low up here. So now we can see this is where they're dumping Microsoft. So they thought Microsoft was overvalued up here. So they sold it between this range. Microsoft dropped, and look what happened. They came right back down to this old money that they had on the chart back here in April.
Yeah.
So it came back down to this zone in August. And the reason why Microsoft bounced right back out of it, just shot it back out, is because all it did is came down here and re-triggered that money that was sitting here. All them buy orders that they had, they started re-triggering these buy orders and it shot back out. Then it came back down again and retouched that same zone. And not only did it start filling these orders again, but they actually came back in a second time. Because now if you see how over here, this zone stops here. And then right here on this candle, it's showing you that they bought the dip on Microsoft right here because a new zone came in right here. So they bought Microsoft again to protect this position that they already have. So they came down, they bought Microsoft again, and it shot up from 400 all the way to 440. It bounced out that money, and you can see kind of how they play the game. So with our chart, we can see everywhere they've accumulated Microsoft shares, even back to May 2023, we can see everywhere they bought Microsoft, where their positions are. And we can see if Microsoft was to shoot up and get back in this zone, we know that this is where all their sell orders are sitting at. Okay.
Okay.
So we use that information when we're basing our doing our trade plan. So even if you come down to a 5 minute time frame and we look at that same information that I just gave you on the 1 day time frame, it's going to be the same thing, right? Microsoft, this is on January the 3rd. They bought Microsoft on January the 3rd between the price of 421.46 and 420.94. It shot up, came back down near this zone, and then it took off after they bought, right? It took off, went all the way up to 434. They decided to take profit on Microsoft, but when it pushed down, they took profit again, and look where it came and stopped at. They bought it here on July 3rd. This is the 5 minute time frame. They bought it on July 3rd. And then when it came back down here on July 7th, right, 2 days later, look where Microsoft bounced from. It bounced right back from that old money, just like it does on the daily time frame. You see that? Came back down and touched it again and bounced again, right? So this when we can see their position is beneficial because we know that if we got into puts here, so say we saw this bearish, we saw them selling and this big bearish sell zone popped up on the chart and say we were riding puts down. As we are, so this zone is already this zone has already been on here since January the 3rd. So as this thing is approaching this range down here, we know that the opportunity for puts is over with. You have to be out of your puts because now you're running back into institutional money that's trying to bounce Microsoft back up. You see that?
Yeah, yeah,
So we can see exactly where they're positioned at, so we know when to, so we can know when to get out of a trade when we're overstaying our welcome and all those type things. So this is how the institutional buy zones and sell zones work, and then we can see them even if you go down to the 15 minute or go up to the 15 minute. You can see the same thing, but the higher the time frame, the stronger the zones are. Okay,
yeah. Okay.
you understand that what I just said?
Yes, sir.
Yeah. So the higher the time frame, the stronger the zones are. And so like we look at here, I'm zoomed all the way out, but this is the 15-minute time frame. So
Yeah,
back
yeah.
in July, they sold Microsoft off from up here, and look what happened. We came all the way over here, and we got back up to that range. But if you got this type of information on your chart, when we getting back up here for the first, so we came and created this zone way back here in July, and it took all the way into December to get back to this zone for Microsoft. But me when I since I got this chart, I don't have any questions that I have to add. I know that I'm getting out of the trade. If I'm in calls, I'm taking profit here and I'm looking to establish a put position if they get weak right here. Because I can already see that the last time they came up here, they dumped Microsoft from 457 all the way down to 385, right? And then this is the first retest of that zone right here. So I know that it's a lot of sell pressure right there. This is where the institutional bears are camped out at. So you see what happened. We came up here and tapped it twice, and it dropped from 455 all the way down to 415. Okay. So this is why we have these zones on our chart so that we can see where smart money is positioned at on the chart, and we can take advantage of that by, you know, paying attention when to exit and when to enter into trades based off of where their positioning is. Now the other part, hold on for a second. Okay, I'm back. Let's see. So the other part to trading is to understand how your moving averages work. And so on the Wolf chart, we use three different moving averages, and I'm gonna go over each one so you can see kind of how I use moving averages, and you can take advantage of like this skill when you're doing your trading. Okay. All right. So the first one we're gonna look at is the 12 EMA. All right. So the reason why I use the 12 is because the 12 EMA is the best in class for exponential moving averages at determining what the short term trend is going to be. Okay. So when you're dealing with moving average, that number that you put in front of when they say, "Well, I'm using the 9 EMA or the 12 EMA or the 50 or the 21," it's just looking at, if it's the 12, it's looking at the 12 previous candles of the stock to determine what the trend is. If it's the 9 EMA, it's looking at the 9 previous candles to determine what the trend is on whatever time frame you're on. Okay. So if you're on a daily time frame and you're using the 12 EMA, it's basing the trend and its slope, how it moves and how it bends and turns. It's going to base that off of the past 9 candles if it's the 9 EMA, in the past 50 if it's the 50 EMA, and it takes that calculation of price action and all these different things, and it tries to determine which direction the trend is, and it tries to signal it to you by how it's sloping and things like that. Okay.
Yeah. Okay.
Now the way that I use the moving averages though is I look at the candles behave. I look at the candles behavior around the moving average. So what I look for to determine what a trend is going to do is I look for a candle to show me extreme weakness or extreme strength beneath or above the moving average. Okay, and I'm gonna show you what that looks like. I'm gonna just go to the 1 hour time frame. So what that looks like is you see how Microsoft was in this little downtrend right here.
Mhm.
Can you see that? And then so we were a little choppy right here, but then when we got a candle to open and close back above the 12, let's zoom in. So this candle right here, the entire candle is back above the 12. So you see how we were here, we were dropping, we lost the 12 EMA here with this candle, and then it tried to get back above it here. This candle's touching it. That candle, we had this big red candle come down, and we had this nice green candle to pop back up. But all of them are touching the 12 EMA, right? Or they, I mean, they're not getting back above it to reverse the trend because it's in a downtrend right here. But then you see this candle right here. So this candle is the one that it got back above, completely above the 12 EMA, with the body of the candle and the wick of the candle being above the 12, which is, the thicker part is the body and the skinny part is the wick. This candle right here has no body basically. It's like a doji. It's just like a look like a plus sign. So in itself, it's a reversal candle, but it's above the 12 EMA, but no part of the candle, like the wick, how the wick of this candle is touching it and the wick is touching it. This candle right here is the one that signaled strength above the 12. It conquered the 12 because no part of this price of this candle touched the price of this 12 EMA. So now it's just above it and it dominated the 12. And so now we can come out of this uptrend with this signal. And you see how after we got this candle, we got a decent trend reversal, right?
Yeah.
We got a decent trend reversal. And you can see that constantly. Like when we lose a 12, like we lost a 12 here with this candle wasn't a signal. That candle wasn't a signal. This one wasn't a signal for a reversal. This candle was a big, beautiful green candle, but that doesn't mean anything unless you get this candle right here. You want a candle to stay above that 12 without coming down and touching it at all to signal that the trend is finna shift. And then not only that, this reversal right here, you got multiple candles consecutively closing over the 12 without touching it. It showed true strength that they was ready to go up in a strong way. So now if you zoom out and look at that reversal, we were able to move up from 430 all the way to 450 on Microsoft after this signal. Okay.
Mhm.
So that's what you want to look for down. So you see, we lost the 12 here and we dropped. And here we regained the 12 by opening and closing the candle above it. If you zoom in, you can see that wick is not touching it. And then we lost it again with, let me see what candle made it turn. This candle right here, open and close under the 12. And we got a nice drop. And you can, if you zoom out on this line, you can see the trend shifting back and forth off of us losing or keeping and holding above the 12 or falling beneath it, right? So what I did with my 12 EMA is I wrote code. It has what you call dynamic color change. So instead of having to look for this candle all the time, all we do is we look for, if the line is blue, that means that the 12, a candle must have opened and closed above it, because the only way it can flip, only way this line can flip colors is if this condition is met. And so when a 12 EMA is blue, that signals that you're in the uptrend. And when a candle open and close and shows weakness under it and confirms, the line flips to red to let you know that we're in a short term downtrend. Okay. You got any questions about that?
No, sir.
Okay. So we use a 12 and just keep getting used to hearing the term short term trend detection and then long term trend detection, right? So the 12 is our short term trend detection system because it's only taking in consideration of the past 12 candles. What we use to detect what the long term trend is, we use the 200 WMA, which is the weighted moving average. And I'm gonna show you what that looks like on a chart. So we take the 12 off. The 200 is looking at 200 candles to try to tell us, okay, the stock is in a bull trend or a bear trend. So since it's looking at more candles, we use this as our long-term trend system because it's looking at more data, more candles. So this is when a person say a stock is in a bear trend versus a bull trend, like an overall bear trend or a bull trend. You base that off of your 200. So you can see that I made the 200 yellow and bright and sunny, right? To signal that we're in this uptrend right here. And so when this 200 is yellow, it's showing you that the overall trend of the stock is bullish. So your bias needs to be leaning bullish while you're above your 200. And when you're under your 200 and it's red and bearish and depressed, your bias needs to lean toward puts because the stock is actually in a bear trend on that time frame that you're looking at. And so if you zoom out, if I zoom out here and you look at you got a bear trend here. If you were trying to force calls, you had to be very quick and be in and out with calls because the overall all the money is to the downside, right? And if you were in puts here versus calls, all the money was being made to the downside. Anytime you losing that 200, you see that it's immediately bearish. Like Microsoft is under the 200 right now, and it's being getting sold off, right? It then dropped from about $10 or $10 to $14 now since it lost to 200. Okay. So even though we have these pullbacks, so this is how we take advantage of the pullbacks though. So like let's look at this example right here. When we get an open and close candle under the 200, just like the 12, it flips the 200 to red when a candle shows weakness to signal that the trend has shifted. And we got a weak candle that showed us the trend was ready to change. And we got this big drop. And right here, you see how we're in this strong uptrend, but then look at this pullback. It pulled us back down to the 200. So the way that we take advantage of that is we have to have something that can detect a short-term trend shift, and that's the 200. I mean, that's the 12 EMA. So when we add our short-term trend detection on here, we're going to see these pullbacks before that, as they're happening, even these ones while we're above the 12. So you see how we're in this uptrend. We got this blue gold cross. When the 12 crossed back above the 200, we got in this strong bull trend because our 200 is yellow and our 12 is blue, showing that our long term trend is bullish and our short term trend is bullish. And then here, our short term trend turns bearish. But not only that, we got a wolf chart depth cross, which is when the 12 crosses under the 200. Now you have a red 12, which is a short term moving average, and your long term trend is bearish. So look how easy it is to see downside bearish activity when you have both of your trends in agreement. Same thing here. Our 12 crossed down under our 200. Easy money on puts. Same thing here. Both of them are bearish. So that's your bias got to lean toward puts. When your short term trend is saying you're bearish and your long term trend is saying you're bearish, then you need to be bearish on the stock. There's no point in buying calls if both of them are bearish, right? Same thing here. Our short term trend got under our long term trend. The 200 is bearish and your 12 is bearish. Your buyers has to automatically start looking at puts as where the money is going to be. If your 12 is blue and your 200 is yellow, both of your trends are in an uptrend. Your buyers has to go to calls, right? So just by eyeballing your chart, you'll be able to know what the trend is, or they won't be able to fool you on what the current trend of the market is because you'll be able to see it visually without even having to know technicals, right? So the other part that we have to the chart is the trend lines, and so let's add our trend lines back. So do you see these lines that just popped up on the chart? This diagonal green line right here,
Yes, sir.
and then you have the lower line which is red. Okay, so we had this diagonal red line and we had this diagonal green line. And so when we turn our order blocks back on now and we look at our order blocks, so I wrote code for the moving averages to change color, but I integrated it in with an existing trading view indicator that shows us our order blocks and the institutional buy zones and sell zones and things like that that smart money uses when they're trading. So now we can see how a trade setup would look. And I'm gonna show you all three levels of the confirmation. Okay. So when you're looking for puts, it's three levels to the confirmation system. And what you want to see at level one, when you're trying to get into puts, when you soon you open your chart up and you say, okay, I want to get inputs on Microsoft, you have to make sure that the time frame you're on that you're gonna take the trade on, whether it's on the 5 minute, 15 minute, and you want to look and make sure that you have the setup is telling you and the trend is telling you that okay, puts is where the money is. So if I open my chart up, what I want to see is at level one, you want to see two things. You want to see that you have institutional bears, the smart money, these red buy zones. You want to know that they're dumping the stock too. Okay. If you want to sell the stock and buy puts, they need to be buying puts first. Okay. The second thing you want to look for at level one is you want to make sure that this yellow 200 is bearish because that means that not only do you have smart money pushing the stock down with their money, you also have the long term trend is in agreement with you that Microsoft is bearish. Okay, that's level one. You need a red order block, a red sell zone near your trend line, and you need a red 200. At level two of the confirmation, the second step in the confirmation is that you want to see that your 12 EMA, your short term trend, is bearish as well. So you want to see that at level one, sell bearish sales on your chart, and you want to see that the 200 is red. At level two, you want to see that your 12 EMA is red. And then the final confirmation is after the stock price passes this red trend line right here, you just want to see a candle show extreme weakness under this trend line. You want a candle to open and close without touching the trend line or the 12 EMA. So the candle has to be the first candle that opens under this red trend line without touching the trend line or the 12 EMA. Okay. So in this situation, is this green candle right here. Okay. So this green candle is the first candle that didn't touch the trend line or the 12. Okay. It's just floating in between both of them. And that's why we call this candle a floating candle because it's floating in between your 12 and your trend line. So this candle is going to always be after the trend line, okay? For puts or for calls. So we're looking at puts right now. So if you zoom out and you look at what we were looking for puts, you're looking for all red. Red sales on, red 200, red 12, and you want to be under your red trend line. And then once you get a candle that shows weakness under the trend line in the 12, that's your confirmation for puts. If it's a green candle, in most cases, if it's a candle that is a decently strong green candle, you want to enter in close to your test of the 12. So if you're just far away from the 12 EMA, you want price just to come up and just test that 12 EMA, and then you would get just then you enter your trade and you can get a good drop, right? So that's what you want to do when you get that's your confirmation. So let's go look at it again for puts if I can find some more puts for Microsoft. Let me go to a lower time frame. So we're gonna look at another example for puts, but then we're gonna look at an example for calls. So let's see. Yeah, so we got some institutional sales zones on the 5 minute chart. It's not so choppy, right? So now here we got another example here. So we got at level one, we got a red sales zone right here, right? And we got the 200 flip red all the way down here. So we need to wait till the price gets under the 200. So you see how these candles dropping. But we didn't get until we got here. We didn't get a floating candle until we got this candle, right? So we got a green candle here. That's our floating candle. We're under the 200, and our 12 is already bare. So we got red 200, 12 red sellers up here pushing us down. We got this green candle. So all we gonna do is wait for a retest of that 12. And as soon as we bump that 12, that's our entry for puts. We already got our confirmation candle right here because this candle opened and closed under the trend line and the 12 EMA and it was under the 200. And then if we enter here, then we got our drop from 426 all the way down to 422. That's a $4 drop from the 5 minute time frame. Okay. Now for calls, we're looking for the opposite of that. What we're looking for calls Let me zoom out here. We're looking for at level one, we want the long term trend to be bullish, and we want to see bullish money under us. We want green money under us. We want these buyers to be sitting under us, and we want our long term trend to be yellow, the 200 yellow. Then at level two, we want our short term trend to be bullish. So the 12 will be blue if it's bullish, right? And then after we get all three of those, yellow 200, green money, and a blue 12, we're just looking for the floating candle after this green trend line right here for calls. And that would be this candle right here, right? So we got our floating candle here. And you see price consolidated came a little bit closer to 12. And then we shot up and got our made some money going to the upside here. So you're looking for the same all your trades you're looking at after this trend line. Now the reason why this trend line is important and the reason why we use this trend line is because a trend line on our chart can only come from a sell off. So when a stock makes a swing high, you see how this green counter we got this strong rejection and Microsoft dropped from 422 all the way down to 420, right? Right here. And then if you pay attention, every time a candle tried to get back above this diagonal trend line, it rejected. This candle got close to it, it rejected. The price dropped all the way down here. This candle got close to it, pushed above it and rejected. This one pushed this high up above it, and then it rejected. We got this red candle that pushed all the way back down. This was acting as a level of resistance, but diagonal resistance. So that's why when we dominate it and open a candle on the other side of it without touching it, that's the stop price showing that, okay, it's ready to break out. So then we got this candle that showed dominance over, even though this is a small red candle, it opened and closed on the other side of this trend line and above the 12 EMA. That was our confirmation for calls. Okay. We got
Okay.
this. We got the same thing here at this breakout, even though this was a gap up. We got green money and we got a yellow 200 showing us that our long term trend is bullish, and we got money pushing us up. We got a bullish short term trend with the blue 12 EMA, and then we got our floating candle way up here, and then we get the pop up, right? So the other thing that we add to the chart to help us with these floating candle confirmation, we got another one here in drop. We got a bearish 200, bearish 12, bearish institutional sellers. We got our floating candle here, and we push down to the target down here in this green zone. The other thing that we have on the chart to help us manage our trade is that the chart also helps you to select the correct strike price, a realistic strike price for your trade. So if I turn these support and resistance lines darker, so you can see them on the chart, well, it ain't got to be that dark. Let me see. Hold on. I'll turn these to gray. Yeah, that's cool. So now what I just did is I turned on my support and resistance lines. So on a wolf chart, if you ever charted, if you like have charted any time, when a person say they're gonna do some homework and they're gonna do their due diligence on the stock, 9 times out of 10 they're gonna go get somewhere, chill out, and they're gonna try to chart out the price action by putting lines on their chart, these horizontal lines to map out peaks and valleys on different stocks on different time frames and things like that to kind of see where the support and resistance is, where the A plus trades are, things like that. And so on my chart though, I coded the chart to look over the past 400 trading days of the stock history, and it automatically draws all the support and resistance levels for you, way more accurate than how you could than what you could draw them. And then it also keeps the chart up to date for you. So if a stock goes to all time highs, before you close your chart out, it's going to already plot out the new levels for you. And then not only that, since it's basing it off of historical price action, the thicker these lines are, that means the more times that this line has been touched or acted as support or resistance. So the thicker the lines, the heavier the support or resistance. So you can visually see where the heavy support and resistance lines are, And also, if you like, if I move this chart over to here, you can see where the A plus trade ranges are. So you can see where Microsoft can break above this level, and it has like one little level of resistance, but it can pop up from 432 to 440 quick, or it can pop from 440 to 445. It has a big, huge A plus trade range here between 445 and 455. And the reason why I know these levels are accurate, just look at the past price action. Microsoft got above this level with strength, and it pushed right to its targets. Pushed to this level first, break, retest, pushed up, hit that level. When it lost this level, look how easy it dropped because there's no support and resistance. When it lost this level, look how easy it dropped. When it was shooting up, look how easy it popped up through that level without no support and resistance. Even here, when we bust out this demand zone, we don't have much support or resistance here. It was able to price action was able to move. So you could have a trade plan and know, you know what I'm saying, kind of when it's time to go out of the money, when it's time to get contracts a lot closer to the money by looking at your historical support and resistance lines because Microsoft has traveled these roads before. So you can already see, you know, how far it can explode up, where's the best range to trade it in, and you can, base your risk off of historical data, right? So now when we look at the floating candle, so if we look at the same example, now we can build a whole trade plan that makes sense and pick strike prices that make sense as well. So if we look at this and we say, okay, this is right here is a call setup for Microsoft. We got our trend line right here. We got institutional money here. Our 200 is bullish, and we got green money under us. Our 12 is blue, so it's bullish. So we got green, yellow, and blue. So we know it's a go for calls. All we waiting on is the confirmation. We get our confirmation candle here on this candle right here. But since we get our confirmation candle on this, since we get our confirmation on this big green candle, if you look at the top of the chart and look at what price this candle closes at, to make itself to the floating candle, it has to close and still be above the trend line and the 12 MA without touching either one of them, right? So when this candle closed, if we look up here at this C, it closed at uh 424.71. And then if I'm getting in calls, what I'm interested in is the first thing that can mess my play up. So the first thing that can mess my play up is this really thick historical resistance level sitting right here above me. So since I know that the thing that can stop this play from I want this thing to go up as high as possible. But looking at my chart now with my since I can see the historical support and resistance, I see that if I get in my trade here at the close of this candle at 424.71, the first thing that can stop me is 428.67, this historical support and resistance. So that automatically gives me my range. I can buy strike prices only between 424 and 428, right? And so if I buy my strike prices between if I'm day trading or if I'm getting like some whatever contracts, if I buy my strike price between 424 and 428, I have a high probability of hitting my first target with the wolf chart confirmation system. So within 6 to 10 candles, I'm gonna be at my first target. So that means my entire position can be in the money at 428. I'm locking in most of my profit here. And I'm gonna leave runners to try to come and get the rest of this. So do you understand that how I'm picking my strike range based off of what's realistically attainable as far as a target? Do you get that? I can't hear you.
Yes, sir.
Okay, okay. And so if you look in the past, you see this level has rejected Microsoft from 428 all the way back down to 410. So look at the accuracy of this level. This level already on here before this trade happened. We come up here and hit this level. And if you were playing around with it because you thought you were going to go up and just explode past it, it rejected at the target, pushed all the way down to 417. So if you didn't take profit here or take profit here, as you went past your entry, you already losing money. You already lost the trade by not being disciplined and taking money at your targets. And they give you all the targets in the chart already ahead of time, right? So then if you get back above these levels with a break retest, you can play these levels, and this thing's built inside the chart to show you when to re-enter. Like this BOS right here stands for breaker structure, and that's letting you know that it's finna go higher. When we broke structure here, these are continuation signals that's built inside of this indicator, right? And so when you have a breaker structure, that just means that you broke the previous high, right? So you have this high, then you have a lower high. Then since you broke this high, the chart signaled that the stock was about to go higher. And you came down, you made a new high. You came down and made a higher, you made a higher high, then you made a higher low. Then once this counter broke this higher high, they signal a breaker structure, and this happens like in real time, very fast. Signal a breaker structure to show you that you was gonna get continuation, and we consolidated. We made a higher high, made a higher low. We broke this higher high, and just keep giving you. You see all these breaker structures leading all the way up until we got to where sellers were, and so it's giving you continuation signals all throughout this run up so that you can take advantage of extra entries. So I'm gonna take a break and let you ask any questions you want to ask as far as the floating candle system or the EMA color change and all that stuff. And if you understand it, then I'll move on to the next stuff. Do you have any questions about anything?
No, sir. My bad. My dogs.
I can't hear you.
No, sir. My bad. I don't know if you heard that. The dogs started kind of fighting, so I had to. But yeah,
Oh, so
but I got it. I got it.
okay, okay, that's cool. Yeah, and then I'm recording it for you too, so you can always go back
Oh, okay.
and double down. I'm recording it for you, so I'm gonna send it to you.
Okay. Appreciate that, man.
All right, so outside of the floating candle, we also have things inside the chart that I upgraded into the chart that can give you a full system on managing your trade and your portfolio and things like that. So far we discussed that we have automated historical support and resistance. A lot of people don't know that these support and resistance lines are actually color change as well if you set them up that way. But we have historical support and resistance levels built into the chart that you don't have to chart out. We can see smart money positions all over the chart, and we have a full confirmation system for like a breakout with the trend line, right?
Mm.
The other thing that the chart gives you is uh, I built in this dashboard that you can move it anywhere you want on the chart. Um, because like using these right here, you can put it at the bottom of the chart, the left, right. You can control how large it is or how small it is. But for now, for this example, we're gonna make it uh, large so that you can see kind of what's in the chart. And I'm just going to explain to you kind of what it does. So this right here, I built inside the chart. I designed this and wrote the code for this, and this is called an ATR tracker. Have you ever heard of an ATR?
No, sir.
So the ATR just stands for average true range. Okay. So with this ATR tool, it tells you what stop loss you should put on your stock based on the time frame that you're trying to enter in on. Okay, so it basically tracks the stock price dynamically. So like right here, you see how Microsoft is at 424, and so if we go to Bitcoin, for example, let me click on Bitcoin, and you'll see kind of in real time what it looks like. And so it's looking at the live market data. So you see how Bitcoin is flipping prices. And if we look at our tracker down here, is also tracking currently what the price of Bitcoin is in real time, right? And so it also shows you your stop loss dynamically right here. So it's saying if we entered into a long call, so a long is like a call and a short is like a put. So if we entered in on Microsoft at this current price, this is what the stop loss should be if you get in the calls. If you enter into a short, this is what your stop loss should be. So it's telling you exactly what your stop loss should be based off the average price range that Bitcoin moves on a 1 hour time frame, and it does the same thing for like every time frame. Okay.
Okay.
The other thing that it allows you to do is if you have You try to do risk management, it'll allow you right here with at equity. If you have like a $5,000 portfolio or a $50,000 portfolio, right? Doesn't matter. You can type it in manually, and then here, oh, let me put nothing right here. But here, it'll tell you if you want to just only be like 1% risk on your portfolio or whatever. It'll tell you the position size that it recommends for your portfolio size. So it's saying with Bitcoin currently, if you had a $50,000 portfolio, right? And that's what type of money you had. You should be holding like 0.55 Bitcoin, right? So it's giving you a position size. It also gives you realistic profit targets on whatever stock you're looking at. So since Bitcoin has a average move on a 1 hour time frame of $900, it's telling you that these are your realistic profit targets that you can actually hit and take profit at if you were trading Bitcoin. Okay. It also tells you it gives you breakout signals. So like if Bitcoin starts breaking out and moving aggressive, this low volatility will turn to aggressive, which means that if Bitcoin was dropping aggressively, it'll show you aggressive volatility. And if it starts shooting up aggressively, it'll show you aggressive to let you know that the price is going to be moving more aggressively and swinging more because the volatility is higher. And then it also had this breakout confirmation. So when you see a breakout confirmation, that stock could run aggressively with that built into it. Okay. So you use this right here if you need a chart that has risk, it has built-in risk management. And you can also if you wanted to put in your entry price, so say we entered in Bitcoin at 92,000 and you just wanted to know what should my stop loss be. Say you already entered into Bitcoin, but it's way up here. You can put what price you put into Bitcoin. I mean, what price you bought Bitcoin, hit OK, and it's going to give you not only the dynamic price change stop losses, just tracking the current price. It'll also set the static stop losses to show you exactly where you should have your stop at if you entered in at a certain price for whatever stock you're looking at. So this ATR tracker is built in to give you breakout signals, give you really accurate stop loss placement to avoid, like the price is dropping down and stopping you out early. And then it take care of all that kind of like where should my stop loss be and all that stuff. It take care of all that for you. And then if you don't want it on your chart, like after you get your information, your position in, you can just uncheck it here and it'll disappear off the chart. So like we're watching Bitcoin now, but you see how right here we got under our 200, we got under the 12, we were under our trend line, we coming out of institutional money, we got a floating candle down here, right? And you see how it got this drop from 97 all the way down to 91, right? Same confirmation system. And the most powerful thing about if you spend your time looking for these floating candles, uh, and you get good at looking for them, it can make you a ton of money on whatever time frame. Especially if you buying shares or buying leaps or swings and things like that, because it can make you a ton of money day trading. But if you look for that same confirmation on the daily time frame, right? Look at this. You got green money. You got your yellow 200, which means your long term trend is bullish. You got a blue 12. Then you got this floating candle here that's red. You came right back down and retested your trend line and your 12. But look how Tesla exploded up after that confirmation on a daily time frame. You go to any stock and you look for that same setup, you'll see that you get really good breakouts. You got buyers sitting under you at green. You got green money here, yellow 200, blue 12, floating candle on a daily time frame for Google. You see we getting these push-ups for like 2 weeks, 3 weeks. You go to the weekly time frame and look for the same confirmation, nothing different. You got your money down here. You have to wait till your 200 turn bullish, but you already got your 12, so you'll be entering in up here on this candle, waiting on your 200. But you see, these are weekly candles pushing up in the same direction. Same thing here, floating candle, and these are our weekly candles. And even if you go to the monthly time frame and see that same simple setup and pattern, if you get used to finding it, that's where so you can jump into trades and make a lot of money because look at you got a yellow 200, yellow 12. We got our floating candle here at 140 and Google push from 140 to 200 bucks. You know what I'm saying after the same type of confirmation, and it really don't matter what ticker you go to. You can go to Nvidia. It timed that breakout. Yellow 200, blue 12. We got our trend line break here, and we got this 1 month candle close at the floating candle, and we pushed up for all these months, almost a whole year after that. And really, what I'm saying, it don't really matter. You don't have to be like the Mag 7 or anything like that. When you get your floating candle and you pushing up and you going up like a good amount of money. So this one right here pushed up from 392 to 512. That's Lulu. And you look at it on a weekly time frame, you can see the breakdowns for puts. When Lulu got bearish on a weekly time frame, we got under our 200 here. We had our floating candle here, but we got our under our 200 officially here at 351, and it dropped down for weeks all the way down to 230 bucks with the same confirmation, right? And look what's about to happen on Lulu. We coming out of the demand zone with green money. We just got back over our 200, so it's yellow. Our 12 is blue, and we're approaching a trend line on a weekly time frame, and we're going to eventually try to open and close a candle over here for Lulu to try to reverse and shoot up and test 480. But you can see how the setup is already trying to play out. It's just bouncing off of this little fair value gap. We're about to get this blue gold cross, just like we did back here. You see, this is almost the same identical setup. About to cross before the trend line, eventually get above it, and have a parabolic move on Lulu. So that'll be a good one to keep on your watch list right here. It's almost about to confirm. So it's looking like it's about probably about a week. I mean, about 2 to 3 weeks out from making a confirmation. So we'll see on that one. You got any questions about that floating candle pattern?
No, sir.
Okay, okay, all right. And so the other thing that's incorporated into the chart that's going to help you to get in and out of trades and also exit when you're maybe overstaying your welcome. I built buy signals and sell signals into the chart. So like right here, this is on a weekly time frame, but let's go down to like maybe a 1 hour, right? To see what type of buy and sell signals it's printing here and the accuracy of them, right? So like even here when Lulu was in this strong push up, this is a 1 hour breakout. We got green money, a yellow 200, blue 12. We got our floating candle here. We got a break of structure. They gave us extra confirmation. We got more money coming in, just giving us even more confirmation that money's rushing in. But we got our floating candle. We just marching up, holding a 12. And we got our first sell signal here that warned us. It pushed down a little bit, came down to 397, consolidated a little bit, bounced up, and we got another sell signal here, which is this red triangle. Got another sell signal here on a 1 hour time frame, and then we pushed down, lost that momentum. We pushed up again and got another sell signal after we rejected at 408. And so this built-in sell signal still helped us to go ahead and drop down from 408 into 386. But at the same time, when it's pushing up, if you're in calls and you start seeing these sell signals print, that's a warning that it's time for you to go ahead and lock in your profits, right? Works the same way on the 5 minute, 1 minute, no matter what time frame you're on. We go to Tesla and look at how it performed with Tesla. We had a push up after a floating candle. So we got, our money down here, yellow 200, got a floating candle. We pushed up, almost parabolic right here. Got three sales singles, sell, sell, sell. If you didn't take profit up here, then it dropped from 360 all the way back down to 310. We got another run. Got a yellow 200, green money, blue 12. Got a floating candle. breaker structure. We pushing up after all our confirmations. Pushed up. Everybody thought Tesla was about to go to 500. We got two sell signals at the supply zone, but the sell signal came on the candle. Two of them in a row. Dropped from 483 all the way down to 416. Bears thought it was gonna go all the way down to whatever 300. We got buy signals, two of them in a row printed, pushed up. Got a sell signal up here, so the sell signals and buy signals are printing accurate to help you get in and out of trades, or even enter into trades. And what I partner with the sell and buy signals is a moving average that I developed and I coded. It's called the Wolf Trend moving average. So this is like a higher level confirmation. And what you want to do with this, I'm gonna give you documentation on it. I'm gonna give you documentation on this moving average, but it's quicker than modernized or traditional moving averages. And we use this moving average and partner with these sell and buy signals to get entries in. So it's just going when you see it on your chart, it's going to be this very fast moving average right here. So this green line is the wolf trend moving average. And what it does is it'll come up and surpass your candles. Once candles start closing in the inside of it, that up move is done. Like it's gonna overlap them. It's gonna become resistance above them. It's gonna come. I built the moving average to where it knows exactly where supply zones are and where demand zones are. So it's always gonna come up to your supply zone where the sellers are, where the big money sellers are, and it's gonna come down all the way down to your demand zones and scoop the price up if it's time for it to reverse. So the difference with this moving average is that I built it with a built-in signal line, which is this red line. So these two lines are just one moving average, but it's the moving average and the signal line. So you see how if I zoom into it, you see how this green line arcs over the price, and then when it crosses his own red line, you see this red line right here that it crossed over.
So
When it crosses that, that's the confirmation. So you just want a candle to open and close in the inside of this green line, and then you want to see the green line cross down on the red line, and that's your confirmation that the trend is finna reverse and push down aggressively. It's that simple. Just a crossover, a moving average crossover. Same thing here. We're in the supply zone. It knows where the supply zone is because I have it volume weighted, and it adapts to volatility based off the ATR and all these things. So it knows where the money is on the chart. It knows when volatility is coming in. It's like an intelligent version of a moving average. And so it comes up, wraps around the price. It senses that price pushing down, and it comes and grabs the price and pushes it on down, give you that confirmation. When it's time to reverse up, even after these buy signals print, it's gonna come back, scoop under the price, cross its own signal line to confirm the pop up. And so you'll see that no matter, even if you go down, it adjusts itself to whatever speed you go down. You can go all the way down to a 15-second time frame. It doesn't really matter how fast the time frame is. It's gonna perform the exact same way, whether you're on a 1 minute, 5 minute, 15 second. Uh, it's like really, if you're a day trader and a scalper, like it's a huge, edge, what I'm saying, to have one that's fast, that moves that accurate and knows where the comes all the way down to support and resistance and then scoops the price up at those levels. And even if you pushing up parabolic, it signals when that move is over. Once the candle start closing the inside of you, pulling back. Once the candle start closing in, it's gonna drag that price down. Uh,
which
so
time frame is that?
this the 5 minute right here.
I mean, that's the one I've been using the most.
Yeah, so if you got this one here on your chart, you can go in and if you want to make it bolder or thicker so you can see it better. Um, this is it's going to really help you enter and exit in these. You see how we come down? It came down to the demand zone. So you want your demand zone. You want to use these demand zones. You see how we in this bearish drop right here on Tesla. Before the 12 saw the reversal, any of these it comes down, and once it crosses itself back over, you get a candle to close on the inside. Once it crosses itself back over, it's signaling a reversal for you. So we have our floating candle way up here at 396, but it signaled the reversal down here at 391. So that's a $6 move before we even got to our floating candle even to come up and hit our target. It had already signaled that reversal, right?
Hey, Sean, this is Pablo. Happy New Year's, my man. I'm the
What's up,
one
bro?
that chilling, my man. Hey, I just want to have a testimony on that exact same level right there.
Mm-hmm.
I'm the one that put my homie on this chart. I told him about it because I purchased it the day after Christmas, right?
Mm-hmm.
But I ain't gonna lie, man. You probably mad. I haven't been using it because I want to learn price action for myself,
I got you.
and I was back testing, and I was kind of frustrated because I really just started trading not too long ago. Maybe this is my
Mm-hmm.
third week, and
Okay.
I finally had my losing day on Wednesday. Yesterday, I lost. I was up 1,000, but I ended up losing 200 on the day. And
Mm-hmm.
but you see how that dropped right there. So I wasn't using your chart. Don't be mad at me, my man. I was using the EMAs, the 9, the 20, the 50, and the 200. And I
Okay.
seen that big red drop. And man, I got in a put, right? And I was
Mm-hmm.
being greedy. But on your chart, I don't know why it's not populating right now on yours, but on mine, on that big red candle on the bottom side, right next to the tweezer bottom, before the wolf trend crossed over,
Oh,
it
right
had a
here.
buy signal.
Oh, yeah.
And
Mm-hmm.
but I was like, damn. I was like, man, this thing would have told me if I was using the chart that you gave me. I was like, I would have known to exit my trade and then
Mm-hmm.
run it up to the upside, and I would have look at that push up, bro.
Oh,
You know what I'm
yeah. That's a
saying?
lot of money right there.
That's a lot of money that I left
Yep.
on the table. But I
Yeah.
was, and that's my fault. And my homie Jose, the one on the other side, he was
Mm-hmm.
like, "Dog, you have the cheat code." And I just want to have, like I said, just a testimony, man, how accurate that wolf trend. I just wanted you to explain to him how that's kind of like the Mac, because I remember last time when I was in the
Yeah.
meeting with you, you said it's kind of like the MACD, but it's a lot quicker.
Yeah, it's a lot faster. So it's just like a MACD. So a MACD shit lets you know when the momentum shifts because the MACD uses the 12 EMA, right? So that's why the 12 EMA, where I say it's the best in class for trend detection, is because if you look at anything that detects like momentum shifts or trend shift, like a MACD, it's built around the 12 EMA. So all the MACD is, it takes the 12 EMA and it takes the 26 EMA and it takes the difference between them to make that signal line. And so when the signal line cross up, the MACD says, okay, now the trend is bullish. And if the signal line crosses under, it says the arcade trend is bearish. But the MACD is a lagging indicator. So you see how this is the 12 and what the MACD uses. You see how fast it reverse price before it
On
even
any
gets
time frame.
before it gets to the 12. And so it's like faster than it's gonna let you know when that uptrend is gone, when them candles start closing in the inside of it, you see how once it crosses itself, it just drags. It's just
Momentum's gone. Yeah.
your momentum gone. And so the reason why it's so accurate though is because if y'all ever study the ATR, so I inside the code of this moving average, I built the ATR inside of it, so it knows what the volatility is in the market, and I also built parts of the VWAP and volume weighting inside of this moving average. And so with a volume weighted moving average, it knows when the volume and price volume is increasing. So with it having volatility built inside of it through the ATR, it filters out false breakouts and false signals. So it knows when volatility is really spiking, it reverses itself and say, okay, the trend is shifting. So let me push up and signal that the trend is trishing. Like we were just looking at Bitcoin switching up. Now look how like it signaled that trend so that shift so early on Bitcoin
Mhm.
way down here. And look, we always at supply now, right? And so it just makes trading like easier for you to be able to get in and they give you these accurate signals and then you use your historical support and resistance levels to take your profit. So you just lock in your profits at your targets, and the chart is built to help you to not be greedy. Like just like you said, like Pablo, when you push down that buy signal triggered, if you was in puts right here, like you licking your chops, like man, this thing finna crash all the way down. But then when it start printing these buy signals, it's letting you know
Mhm.
my buy signals incorporate moving averages, but also the RSI and the MACD inside my buy signal. So when it prints this buy signal down here, even though we dropping hard, it knows that the momentum and bears are exhausted. So it's telling you, okay, the RSI oversold, the MACD is trying to we're getting divergent. So I built all that into my buy signals. So when you start seeing them, it's letting you
That's crazy, bro.
it's letting you know that okay, the momentum shifting out, and then the wolf trend is picking up the volatility and the ATR, and it's saying okay, now we got buy signals here warning you. Then we get the crossover signal, and you get the reversal.
Mm-hmm.
You see what I'm
A
saying?
nice little run though. Yeah.
Yeah. And so if you scalping, bro, if you learn how to use this wolf trend and you scalping, I'm trying to tell you, bro, you're gonna be faster. You're gonna know when stuff is switching quicker than everybody. Like even
Yeah,
if
I
you
ain't gonna lie, bro. When I was using it, I was 120, 150% up on trades on that thing. And then I was like, okay, let me I'm in the Chris Sain Discord, and you know how I'm pretty sure you know Face and all them dudes, and I've been trying to use the orb strategy, you know what I'm saying, just to try to learn price action. But
no,
I
yeah.
still had the wolf chart on, so I was like, oh, it just as extra levels of confirmation, like how you talked about. But
It's
then
all there.
I guess I just got a little cocky and greedy, man, and that thing just took away
Yeah,
yesterday's profit.
so ORB, man, that's a good strategy, but and I mean, I'm not a but ORB is a strong strategy, and the wolf chart is just gonna help you with your entries and your timing, right? So if the market open up and you using the first 5 minutes to grab a 5 minute candle,
Yeah.
you can also do it on 2 minute candles and things like it don't have to be a 5 minute candle. You can do it on a 2 minute candle. The very best strategy to me though is pre-market high low. You know, the pre-market high and low when the price action breaks over that, you know what I'm saying? Like to me, that's a superior strategy, but you can overlap them. You know what I'm saying? You can put a zone. You can.
And in terms of the confirmation of the chart or
Mhm.
just looking at price action.
I'm saying just looking at price action. Like so, if you were opening, like say we were looking at Bitcoin right at the opening uh candles, right?
Yeah.
And so we were looking at so you could say when the market everybody waiting on a 5 minute candle, you can already map out a 2 minute candle, right?
Okay.
You can already
Okay.
map yourself out a 2 minute candle. Say if this was the first 2 minute candle of the session, right?
Yeah.
You can already map you out a 2 minute candle, right? And you will have you a zone already
Uh-huh.
for ORB, right? You have a 2 minute zone, and then you can map out a 5 minute candle to overlap it. And then you already have two zones on your chart where price action has to break above or beneath. Now, me, like what I did, I'm gonna get this code to you guys also. I'm gonna just show it to you. And I already coded this.
Is that the cloud one?
No, it's for pre-market. You know what I'm saying? It's for
Oh, pretty
pre-market.
much. Okay, okay.
So I was working on this code and I'm gonna release it eventually.
What the heck?
So like right here, if I flip over to I'm on Bitcoin, I need to go to equity right quick. So if I go like to Apple, for example, right? And so I'm in pre-market now, right?
Uh,
You see how when I come into pre-market, my pre-market high and my pre-market low
yeah.
is automatically mapped out on my chart
Hmm.
for anything I go to. So I
That's
can go
awesome, bro.
so I can go to the SPY and I already know the range for SPY.
Without even having the extra trading hours on, right?
Yeah, I got extra trading hours on, yeah. But what I'm saying is I have the levels already mapped out so that if I want to draw a box around that and trade the pre-market high and low for my levels, it automatically do it. And I'm gonna do the same thing. I'm gonna code it for the 5 minute candle to where it can show up in regular trading hours and things like that. But you know what I'm saying? If you automate it, you won't have to try to draw that stuff out. And any stock you go to, you already had a range.
Yeah.
So I'm gonna develop that and send that as an update to y'all eventually. Yeah.
Awesome, bro. And then when is it again that you're gonna transfer over to a subscription base fee?
It's gonna be at the end of the it's at the end of this month in February. So at the beginning of February, I'll be doing it.
And that's the one that's gonna have that cloud structure on it, right?
The one I'm gonna release in March gonna have that cloud
Oh,
structure
okay,
on it.
okay. You still working
Yeah.
on it? Yeah,
Yeah.
because you
Yeah.
showed it to us last time. That thing was nice, boy. How it gets
Oh
thinner,
yeah.
and then you
Oh
know
yeah.
price about to break out.
Oh yeah. That thing's
Man,
solid. Yeah, it's solid. Sure. Yeah.
but
But yeah,
that's dope.
we're gonna have some things coming on down, but uh, you know, all so this video, uh, just make sure you study this video to get to lock down, send these different confirmations. If I recommend starting with the flow and candle confirmation and adding that to, if you're gonna use ORB and things like that, just make sure you get other confirmations on when to enter. You know what I'm saying? When to
Yeah.
enter the trade. If you're gonna do break retest, make sure that, your indicators are supporting the break retest. And you can do your, and then with you, Pablo, so you got always make sure that if you doing like other strategies, right? Say if you got a different EMA strategy that you want to use, right?
You can automatically take those off.
Yeah, so if you can go to the style tab because the chart is super flexible. You can go to the style tab, take those off, and go here, and you can leave the wolf trend on there and say you want to
Yeah.
use, if you want to use the 9 and something else, you can turn these.
Oh, that's what that one's for right there.
Yeah, these are four additional moving averages. And you can
Oh
you
shoot.
can you can turn them to whatever you want, whatever color you want. You see how these lines just popped up on here?
Yeah.
So you can
See,
change
I
these.
was looking at that, but I didn't know I could do that with
Yeah,
it.
and then you just hit this drop down if you want it to be an
Change.
EMA,
Yeah.
SMA, WMA. You can change the numbers over here to whatever you want, and then go to the style tab, and this is where you control the thickness of the line, right? So you can do
Yeah.
it. You can do it that way, or if you want to just keep your levels and your buy signals, and you want it,
Just like that. Yeah.
yeah, and you wanted to, even if you didn't want the trend lines on there, you got so much flexibility with this chart, bro. Like you can put this on a different tab, and then if you want to just keep only this Wolf Pro levels indicator with just the levels, and then put your own moving averages and stuff on there, and just keep the buy and sell signals, you can also do
Wow.
that. And it's still gonna give you right this light trend line right here, but you can add your own moving average system within here and just keep your levels. You see what I'm saying?
Mm-hmm.
So yeah, you can do it, do it however you want to do it, and then just have a wolf
Real
chart and then
flexible. Yeah.
add it again to a blank chart and make a different chart, so you can do whatever you want with
I
it.
ain't gonna lie, though, but the way you have it coded and everything, that's pretty nice, especially when we're
Mhm.
on the go and we're just looking at the screen right quick.
Oh
The way
yeah.
you have, you know what I'm saying, with the coded, the blue turn to red, 12 turn to red, and the
Oh
200 turn
yeah.
to red. Man, that's
Hmm.
awesome, bro. Real talk. And I ain't gonna lie, bro. Like I said, I was trying to do all that, but and then I don't know why. Like I said, I guess I don't know. I'm just trying to learn. You know what I'm saying? But I should have just kept mine on that. I would have saved me from. I would have had 10 out of 10 winning days, bro.
Oh yeah.
With your chart.
Yeah. Now look at that. Look at that. Look how it came to the supply. We watching this live on the two.
What it do?
Came to the two. It came to supply. That wolf trend crossed over that thing, crossed down. Look at it trying to come back down to where the money at. But
Uh,
you see how once it start getting inside of that even though it's pushing up
that wolf
strong,
trend.
yep, you could have been in some puts and you could be taking profit right now, getting out of it. You see what I'm saying? Because it's letting you know super early, even before it got to these moving average, the 12 and the 9 and all
Yeah.
that stuff. It already gave you that signal way up here that the trend was finna come down. It was about to drag it down. You know.
Man, you stay working, huh, bro?
Oh yeah.
That's
Oh yeah, man.
what's up, man.
But yeah, do you have any? What's this, Jose? Who's on the
Yes,
phone?
sir.
You got any questions about anything?
Nah, man. I explained it
Okay,
pretty well and just kind of gotta try it on my own,
I got you.
experience with it.
All right,
Hopefully,
so what I'm gonna do, bro? I'm gonna send you. I got like documentation for the chart. You know, what I'm saying I got user guides for like the ATR tracker. So, just focus on that floating candle and get used to it, and then you can use that on a 5 minute time frame. This wolf trend moving out like we on a 2 minute right now, and it's already you seeing how it's working with Bitcoin right now
Mhm.
live, but this right here gonna be your best friend and letting you know when something finna reverse. You saying, especially if you playing it from supply zones and demand zones,
Yeah.
you can make a lot of money quick. You know what I'm saying with this thing,
Yeah.
and I'm gonna send you the documentation on the chart and the confirmation systems and all that stuff, so you will have everything you need to learn it.
No.
One thing I always recommend to everybody, like if you on TradingView, even on the free version, you see how I have this buy button up here. You can just click that buy button, open up paper trading right here. And once you open up the paper trading, it's gonna give you an account, you know what I'm saying, where you can actually place buy orders and trade and then work on your entries and exits, right? So once you go and hit that paper trade, you can hit buy and then you can say if you want to buy three Bitcoin and just trade it and put a trade order and you can hit buy and then it'll buy the stock or whatever you're trying to. And you can always set your take profit and stop loss ahead of time, right? At these
And you
levels.
can use that what was
Hmm
that thing called? The ATR, the wolf tracker?
Yeah, you can use that ATR tracker to pick your stop loss and things like that. So you can put these orders in and try to test your entries and exits with the stock and then put in like real trades. And so like if I put buy on here, I mean sell on here. Sell means like you're trying to mimic you doing a put.
Shorted, yeah.
Yeah. So like you see how sometimes when I say I'm sliding my stop loss when I'm in a trade, what that looks like it. You see how I have my stop loss right here. So if
Yeah.
this say this candle goes bearish, it like it's finna try to pop up, but if it goes bearish, and you can slide your stop loss down as the stock is going
Yeah.
down. Like you see how that candle's turning red. And
Yeah.
so right now, there's no point in me trying to lose like whatever money. You can slide it or stop loss down and replace it as it drops. So
Mm.
if my take profit is at $400, as if the stock price starts dropping, so I can start dropping my stop loss down, chasing that candle down, so until it stops me out, so I can
Yeah.
keep moving my candle. And it's like right now the current price is at it's like negative or $10 or whatever. But that's how you will practice with that. Or if you want to slide your take profit up, and you can slide that up, or you can do you can. This is how you will manage your trade. But you move your take profit down here. You'll want to be out before that thing, and so you see how it just stopped me out when it pushed up.
Mm-hmm.
You can just practice your entries and exit with that ATR tracker and with Trading View with the wolf trend, and then see what I'm saying if you're until you get a hang of it.
And Sean, with the scalping, like, could we trying to be in? Could we, like you said, we on the 5 minute time frame, right? Like, we trying to be done the first 2 hours of the day. Try to catch
Yeah.
that momentum.
Oh yeah.
Is the 5 minute time frame the perfect area to assess what's going on?
Yeah, your 5 minute. If you're using ORB, um, you want to make sure that your trend is good. You know what I'm saying? Like if you trying to play calls and stuff like that based off of ORB, you want to like once you get your levels set out, you still want to look at like the 15-30 minute just to make sure that the overall trend is kind of in the same. You know, you want to be over your 200, right? So if you over your 200 on like the 30 minute and the 15 minute, and then on your 5 minute you're over your 200. You got a high chance of winning the trade with calls if the ORB is breaking and retesting for calls. But if you're bearish or you add like a critical resistance on a higher time frame,
Yeah.
and sometimes you'll see a ORB or breakout, and then it'll do a fake out. And on
Yeah.
a retest, it'll just dump because you hadn't looked at saying the higher time frames to see, okay, so what exactly has happened on these higher time frames that
I
making me
see.
making me drops. Like right here, we're in this bear trend on Bitcoin. So even though it kind of looked bullish on the 5 minute, like overall,
It's going down.
it's been making that same pattern. It's been going up a little bit and then tanking, going up a little
It's
bit, then
lower
tanking.
highs and lower lows.
Right. So that just puts you in the mindset of once you get in the trade, it's not a time to hold it. If you going against the overall trend, you want to get in there and make your $1,000. Like when you was up $1,000, you just clip
Uh,
it. Or if you were sliding your stop loss up, when it would have dropped past like 800, it would have kicked you out, and then you'd be like, "Damn, I still made $800," but you were still trying to make money, but you was being responsible trying to make money.
yeah, definitely.
Yeah. So yeah, you can do it like that too.
Yeah, right. Yeah, yeah.
But yeah, the chart's super flexible, man. Yeah, you can use that chart any way you want. Uh, I built that system for everybody can understand what it take to make a confirmation system, and I done back tested it and everything like that, so I know
Yeah.
it's good. So
Bro, I sent my man Jose like 12 pictures. He probably like, what the hell going on? I saw like 12 pictures. I said, look at this. With your chart, with your indication, with the buy and sell signals on MSTR, Tesla, SPY. I said, look at this, dog, on the 5 minute time frame. I said, look at this. And then I verified it on the 15, like you said, too, because you know what I'm saying? I want to make sure I got that same signals on the 15 minute. Um, and that thing just ran up, bro. You know what I'm
that's all
saying?
right.
That's how accurate that this thing is. So to
That's
the
right.
point, I was like, Jose, I got you, dog, because we trying to do, you know what I'm saying? We trying to do something, man. And I,
Hmm
I really believe this is the cheat code. It really is, bro.
So yeah, man, man. So we going and with more people having the chart, bro, it make it easier because people just be calling out,
Different stickers, tickers, yo.
bro. Sure, right. Like when you see a floating candle, man, they be calling out. You see a inverse arc or arc confirmation, like this little scoop up. Some people see it, and bro, this Joker, man, it's solid on man on 2 minute and 1 minute, bro. Like you can make it, bro. It's like scalping, bro. This thing be performing, man. So I've been doing a lot of scalping on Bitcoin on that 1 minute and 2 minute, and man, it's just been hitting. Like I'm on a 2 minute right now, and it performs so smooth and show you the reversal so smooth. Yeah, man, yeah. So I mean, it's been making trading easier for me. I've been using it for months though, but it's made my trading like way easier, bro. You know, being able to get in at these demand zones with a confirmation.
How long you been doing this for, bro?
I've been trading for 15 years.
Oh, wow.
Yeah. But see, this chart right here came from me like when I was in Discord, posting
That guy,
plays and
my phone died. My bad.
yeah, I was in Discord posting plays and stuff, and people would ask me to train them, and I was trying to train them on like supply and demand zones and like entering in or opening and close candles, and I'm like, damn, like I really started realizing that man, the learning curve for trading is steep, and so what I did is then since I have a coding background, I was just like, if I could automate everything I do, and all people gotta do is learn how to read the chart, then I think people will be able to learn how to trade way quicker. You know what I'm saying? If they just learn how to read
Yeah,
the
yeah, yeah.
charts.
Read the charts, yeah.
Yep. So now, so that's why I went back and automated all these, these support levels and things like that, the color change system. So even if people don't understand how to really look at a trend, they understand the color red. Mean if I say the color red mean we going down, like they understand colors. And
Yeah.
so I'm just trying to simplify trading to like lines and colors, you know what I'm saying, and timing.
So
And
I
so
need right there.
yeah, yeah.
Got it now, baby. Hey, Sean, I know last time we talked about how you have those futures right there, the bonds. I want can you give
Uh-huh.
like a quick 30-second rundown of why when those are green to expect what's going to happen with the market, and when those are red, you can expect maybe a little jump.
Yeah, so let's look at these right quick. So like right here, the reason why I got this set up right here, exactly how I got it. The 3 month, the 5 year, 10 year, 20 year, 30 year. So these right here tell you when they're going up like they've been exploding up recently,
Yeah,
the higher they go up, these treasury yields, they affect the interest rate. So that means that how when we try to go to a bank to get a house, a mortgage loan or like a car loan, and you know how like the notes in the mortgage note and the car notes are like extremely high right now. They're high like that because the interest rate is so high. So they're charging you more money to borrow money from them. And so that's why people don't want to go, get a new car, get a new truck, because you damn near paying $1,000 for a car note. When back in the day, man, like 300,
yo,
400 is normal. Or like if
that
you
was
try to
just like 4 or 5 years ago.
right, that's right. And so even if you try to get a house, what I'm saying, you paying $3,500 a month. You try to get an apartment, you paying like all this money because the interest rates are so high. And so the interest rates make money more expensive to borrow, make everything more expensive. And so when these go down and they're red, they favor like small cap companies. They had to go to the bank to get loans in order to grow their business and invest and stuff like that. And so when they go down, it makes money cheaper. When they go up, it makes borrowing money and stuff like that way more expensive. So that puts downward pressure on stocks. The other side of it is, how you ever heard of the money market accounts?
Yeah,
When the rates and stuff are high, people just put their money in those money market accounts because
it
they
was
can they
safer.
get yeah they get those high yields and stuff like that. So there's no point if you're getting 6 to 7% yield on your money for just letting it sit in the bank or in a money market account. There's no point of you taking a risk in the stock market if you're just getting a guaranteed, high percent return on your money just by letting it sit, right? So that make people take their money out of stocks and stuff as well. So when these drop, they run inverse to the stock market. The other thing that move the market is the VIX. When the VIX drops, what I'm saying, like when it shoots up like it's been shooting up, this right here is volatility index. You see how I say volatility S&P 500 index. The reason why this crushes the SPY when it shoots up is because hedge funds and like pension plans, they have their portfolios set to automatically sell off the S&P 500 or stocks and stuff like that when it spikes. So as soon as it spikes, they don't ask no question. It's a machine selling it. So it's just code. It just triggers. So when it sets and gets close to when it shoots up and starts going up, it automatically makes the SPY drop. You know what I'm saying? Like because they're selling stocks. As soon as it spikes, they selling, right? So if you look at the VIX, you know what I'm saying? You just look at a VIX chart on a 1 hour time frame, right? You see how it's just like it shot up like that. So if I go to my trading view and I pull up the SPY under it, right? So this is the SPY right here. And if I click on the VIX on another chart, on a 1 hour chart, let's see, what this time frame is, the VIX. So let's line these times up. So if I now look at this, look at the correlation between the two of them. So this was on the VIX chart at December 18th, and look, you see how they line both of them up for December 18th. You see how the VIX is at the top of my chart. You see how it spiked up like that with those big candles.
The SPY drop.
You see how SPY dropped with those same big red candles.
Yo.
They run directly inverse. So when I be saying, hey, the VIX about to spike and it's about to shoot up, and you see SPY drop, when the VIX spikes, these companies I literally automatically sell, like they dump shares like that, and that's why you see when the VIX jump like that, SPY just tanks. When the VIX tanks and reverses back down aggressively, the SPY goes on a bull run.
See, I didn't know that. I just thought it made contracts more expensive.
No, so when you see the VIX spike, that mean you in the day trading. So you got to be in and out of stuff. You gonna expect bigger swings in stocks and all that stuff. You know.
Okay.
Yeah. But I'm gonna get ready for this next call. Well, I got just a 1-on-1, and but I recorded all this, and I'm gonna send it to you. Just send me a message on Discord, and I'm gonna send you a copy of the. Jose, are you on Discord?
No, sir. But
nah, he's not, brother.
Okay, well I email it to you then. I shoot it to you on Discord, Pablo.
All right, bet, brother. I appreciate it, Sean.
No, I appreciate y'all, bro. If y'all need anything, just holler at me.
Yeah. Yes, sir. Thank you, man. Appreciate it.
Hey, man, Sean, you have a happy New Year's, bro. Bless you and the family, man. And I look forward to the info you be dropping, dog.
All right, no problem, bro.
You be safe.
Thank you, man.